Coming up on Market to Market, round 9 of atmospheric river storms in the west with snow in the Midwest. A coalition of farm groups lead the way in the latest lawsuit on WOTUS. Plus, adding to the bottom line with the sun. And market analysis with Elaine Kub next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name, is our mission.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, January 20th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. 2023 is starting off with less inflation, even with our heads bumping up against the debt ceiling. Wholesale prices were off 0.5% in December. This measurement of inflation at the core level, with energy and food removed, was up 0.1%. Retail sales dropped 1.1%. The Commerce Department reported this was the second consecutive month Americans cut back on spending. New housing starts added a fourth straight month of fewer groundbreakings. For 2022, new construction was down 3%. Existing home sales dropped to their lowest level in 12 years by 1.5%. The slide is now in its 11th consecutive month. However, analysts predict the worst could be behind us as the 30-year fixed mortgage rate retreated to an average of 6.15%. Two tornadoes in Iowa were the first January twisters since 1967 this week. Millions of Americans were under winter weather warnings on Thursday as snow and ice were headed to the Northeast. The president flew to California late in the week to get an up-close look at the damage of yet another round of rain. At least 20 people have been killed by the recent storm, and 41 of the state's 58 counties had some kind of weather damage. The 9th major storm from the atmospheric river of moisture flowing from the Pacific Ocean churned through the West Coast this week. The rain on rain has led to many local calamities. This mudslide wiped out a recently remodeled house in Berkeley, California. At least 8 additional homes in this area were damaged or destroyed by the hillside collapse. Side hills scarred by wildfires are more susceptible to mudslides, and recent fires consuming millions of acres of land has heightened the risk. Cleanup of debris was nearly complete following the closure of key roadways earlier in the week. Almost the entire Golden State was dealing with high water. From Stockton in the Central Valley to San Diego, flooded roads and neighborhoods were commonplace. The start of 2023 has been historic for rain in the Bay Area, as rainfall totals were the most in 161 years, the time Abraham Lincoln was president. President Joe Biden visited storm damage in Capitola Pier, California, Thursday. More than 500 FEMA and other federal personnel have been deployed to the state in emergency response to the situation. You can see rainfall for the week nationally, and California stands out with heavy bans in several portions of the state. This led to another 7-day period of relief to the drought situation in the West. This week marks the first time since April 13th, 2021, that at least a sliver of California is out of any drought classification on the drought monitor, and the second week that all of the state is out of the most intense category of D4. The weather also helped improve conditions nationally. After a peak in October, there's been a nearly 25% improvement in parched conditions across the country. Currently, 64.85% of the U.S. is in some form of drought. Moisture in the Midwest and Great Plains came in the form of snow. A low-pressure system dropped several inches on Nebraska, Iowa, and Minnesota as the storm swept across the region this week. Traffic was slowed, but the snow differed from an earlier system around the Christmas holiday that was then followed by a deep chill. The snow here in Iowa was heavy, weighing down trees and power lines. Just before the start of the new year, the EPA published its revised definition of the waters of the U.S. rule. Agricultural commodity groups immediately blasted the new measures as one that continues to create confusion for farmers over what is and is not controlled by the federal government. David Miller reports.
The American Farm Bureau filed the lawsuit against the EPA Wednesday in the Southern District of Texas. 17 others, including the National Cattlemen's Beef Association, National Corn Growers, and the National Pork Producers, were joined by the petroleum industry, home builders, and realtors. The coalition wants the rule struck down because they believe it adopts an unworkable definition of WOTUS that conflicts with the Clean Water Act, the Constitution, and Supreme Court precedent. The suit claims previous exclusions were nullified in the final rule. Barring an injunction or immediate legal remedy to stop its adoption, the new rule will take effect on March 20, 2023. For Market to Market, I'm David Miller.
Home Depot announced this week the forthcoming installation of solar panels to 25 of its California stores. Where panels are built is at the center of many debates across the country. Should an array take up farmland or another location also is part of the discussion. As Peter Tubbs found out in Minnesota, the conversation centers on the community. His report is our cover story.
A load of steel arrives on a November morning near Bird Island, Minnesota. The 7-acre site on the edge of town will host a 1.4 megawatt solar garden, enough energy generation capacity to power roughly 200 Minnesota homes. It is one of dozens of solar projects in Minnesota that fall under the category of community solar, where solar energy is sold directly to consumers rather than adding electricity to the general grid.
I think there are a lot of people who would really like to participate in solar, but for whatever reason, they don't have the right roof, they don't have the right money right now, they're not in an area where it seems tenable, but they really want to participate. They're watching clean energy happen around them, and they want to know, this is for me too.
Minnesota has more solar capacity in the community solar category than the entire country combined, the result of legislation signed in 2013.
I think the fact that there is not a cap on how much community solar can be developed is a big part of that magic formula. But because there's not been a cap, it has really allowed that private sector development to continue as long as there are households who want it and area available to do the development. It has grown just leaps and bounds in a continuous way.
Statewide, there are over 400 community solar sites generating over 825 megawatts of electricity. While 28,000 community solar subscribers purchase the solar energy, only 14% of the energy is used by residential customers. Called community solar gardens, the legislation encourages the use of a commercial or government purchaser as an anchor subscriber. This helps those planning solar gardens to acquire financing for the project and provides a pathway for the purchase of energy left over as residential subscribers come in and out of the program. The Minnesota Code for Community Solar also requires the energy generated by a garden to be used by a subscriber in the county of generation or an adjacent county. The rule has resulted in a surplus of landowners in some areas interested in leasing acres that lack enough potential customers in the immediate area to justify a project.
Electrical wires don't stop at a county border. There's a disconnect because there's wait lists of people that want to subscribe to these projects, and there are wait lists of people that want to host it on their property. And there's just this artificial barrier. in between that says that you two don't line up.
When community solar developers propose a solar project to a landowner, they focus on the consistency of the project.
It is similar to the residential subscriber message. It's take control of the value that you can generate from your property. You know, if we're approaching a farmer landowner, we are likely proposing to only occupy a portion of their property, and we can offer typically higher rates than can be earned through traditional agriculture, but we're not prohibiting the continued use of agriculture.
Landowners interested in hosting a community solar garden are drawn to benefits that are both financial and structural. Many solar gardens are placed on sites that are often difficult to farm or are of marginal quality for row crops. Leases can result in income that is a multiple of potential crop income in a given year, and that rate is guaranteed for up to 25 years. Solar's impact on Minnesota agriculture has been limited. Less than 20,000 acres of solar projects have been completed in the state, a small footprint compared to the 1 million acres of Minnesota farm ground that are in CRP, and a sliver of the 25 million acres devoted to agricultural production in the state.
Solar panels are pretty good neighbors, and once you visit solar sites or even have one in your community, you tend to start to realize that they're quiet once they're installed.
Many solar projects use cover crops rather than hard surfacing, which can improve soil quality. This can both limit erosion and filter runoff, which can improve the water quality of nearby lakes and streams. Many of these areas benefit from being grazed, which can provide another revenue stream for the landowner. The solar industry is also experimenting with growing row crops and vegetables beneath solar panels, finding both yield increases for the crops and performance improvements in the panels. Community Energy Futures of Minneapolis has spent the last decade building community solar gardens as a co-op, focusing on residential customers for the majority of their electricity volume. Working in urban environments, they have sited solar gardens on the roofs of structures like churches, government buildings, and a parking ramp in downtown Minneapolis. A government or nonprofit acts as the primary buyer of the electricity, while the majority of the electricity is sold to residential customers. Xcel Energy, which services 3.7 million electrical customers in 8 states and is the primary electrical provider in the southern half of Minnesota, issues a credit to residential customers who purchase electricity from community solar gardens. Community Energy Futures has been seeking out households with lower incomes to join the co-op and help them earn discounts on their electric bills.
Luckily, being in this state, there are people, like I mentioned, that just get co-ops right away. I don't have to put panels on my house. I don't have to pay anything up front. I might be a renter. My house might be shaded. Maybe I need a roof replacement. I can't afford it right now.
Solar garden developers say most subscribers will see electrical rates drop when they sign up with a CSG. And once the installation costs are covered, consumers will enjoy static electrical rates for up to 25 years.
All these reasons build up that momentum. And what I'm finding a lot of time is like the CSG momentum in general for community solar gardens is growing big time. We just need to do more catching up on like, hey, CSGs are great, but look at this model of CSG. Look at the co-op model versus the model you're getting.
With another 400 megawatts of community solar projects in the planning stages, developers in Minnesota look to continue that momentum. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Argentina's wet week dampened any extended bump from last week's bullish USDA report. For the week, the nearby wheat contract lost 2 cents, while the March corn contract gained a penny. Outside markets helped the resistance in the soy complex. The March soybean contract sold off 21 cents, while the March meal contract dropped by $12.60. March cotton improved $4.41 per hundredweight. Over in the dairy parlor, February Class 3 milk futures lost 42 cents. The livestock market was lower, with February cattle down $1.10. March feeders cut $1.90, and the February lean hog contract shed 82 cents. In the currency markets, the U.S. dollar index lost 17 ticks. February crude oil bumped up $1.51 per barrel. COMEX gold added $6.70 per ounce. And the Goldman Sachs Commodity Index finished more than 10 points higher at 611.50. Joining us now, regular market analyst Elaine Kub. Hello, Elaine.
Hello, Paul. Thanks for the invitation.
Good to have you here. As you drove through, you always get to say you're in wheat country. Snow, moisture, landing on some of this area, pressuring the U.S. crop. Is the U.S. crop story the only one in wheat right now we are following, or you are following?
No, and I wouldn't even say that the portions of wheat country that I drive through that do have snow cover, those are not even the major wheat portions in Kansas, for instance. And the weather folks came out with their climate prediction for the next 3 months just yesterday, and it suggests that there is this band of moisture that will continue to come sort of down through Montana and then swoop down into the corn country, but continues to skip western Kansas, eastern Colorado, western Nebraska, this very arid region that has been so dry and was extremely dry at the end of the fall and hasn't received the moisture that it would need. So, we always kill the wheat crop over the winter, so we don't want to pound that too hard, but I wouldn't say that the U.S. wheat crop is in great condition moisture-wise, even though some portions of the world have gotten some snow.
Well, let's speak about the world. Putin and Russia said something about exports, and all of a sudden, we're going to keep some, we're not going to keep some. Was that a bigger influence on the trade?
Yeah, actually, so the Russians have come out with their more official numbers from 2022 and suggest that they had a great wheat crop, actually. I think maybe even record large. But you're right, it's how much of it are they going to export, or are they going to put the kibosh on that and try and keep that in-house to maintain domestic prices? Exactly, it's very schizophrenic sort of scenario of what somebody says from one day to the next. It's not even so much of the production, it's whether or not it ends up on the export market.
All right, give me a range. Where are we headed? Higher, lower, and by how much?
Boy, speaking of schizophrenic, it's really hard to get a read on the hard wheat varieties where you do have this inverted carry structure in the futures markets, which ordinarily you'd interpret to be a very bullish scenario. But really on the supply and demand tables, it's not like we're running short of wheat necessarily. So there's conflicting information or conflicting signs from the wheat market. And I would just say perhaps they'll be guided by the dollar or by the outside markets more than anything confirmed on their own supply and demand.
Yeah, the dollar was off this week, and that was a good story for the dollar to be lower earlier for commodities. But corn-wise, let's flip to that. Export demand or export sales were a little better than we thought. Top 5 this week: Mexico, South Korea, Japan, Taiwan, China. Exports better than expected. Is that going to be enough to add some bullishness to the trade?
Well, I mean, I don't think that's going to be the savior of the U.S. corn market. If you're looking for higher prices in 2023, exports is not going to be where it's at. There's going to be so much competition from South America. You mentioned the weather there is really the driver of these markets from day to day, and I think that's really going to be where the feed grains exports and oilseeds exports is going to be focused in that continent rather than us. So in the U.S., our demand here is strong enough domestically on its own without even worrying about, tweaking those export numbers.
Well, let's look at numbers then. We're back up almost to $6.
Right.
But the trend looks, if you had to say a pennant way, we're headed lower.
Sure, and this is the tendency of commodity markets, right? We had very high prices, helped by the Russian war in Ukraine, helped by inflation, but some of that has already passed through, and the eternal tendency of commodity markets will always be to go down towards the cost of production. So in my opinion, the likelihood is that we're going to move lower rather than higher. I don't see a reason that we would go back and retest the summer highs at this point. But we are well supported because, folks are willing to go and pay these prices for things. People are willing to pay for ethanol, and I think we should expect to see energy prices really surge here in the next 3 months.
We have a couple of energy questions we'll get to in Market Plus, so I guess that's my tease for that segment after the show that we record that's only online or on YouTube. Elaine, about corn as a range. A couple of weeks ago on this program, it was discussed, why are you storing? Then last week there was the USDA report that said, well, maybe, but I still wouldn't be storing. Are you storing any corn right now?
I mean, I think there could be some upside to the old crop. I am a seller of new crop because of what we just talked about, the tendency of these markets to move down. And if we get, some decent weather in Argentina and we have an expectation for neutral weather in the United States once La Nina sort of fades, I think we should be selling new crop. But if you have corn in storage that's unpriced and you don't really need the cash that badly, yeah, I think there's some possibility in these volatile times that you could have old crop prices move slightly higher.
All right, beans, Brazil. How big's that crop?
Big, record large, yeah. And I think that that's validated by the weather that they have seen, any sort of maps, satellite data imagery that you see coming out of South America. I think you can very well believe that Brazil's soybean crop is going to be record large. Argentina, the USDA has obviously trimmed the production numbers out of there, and the private estimators trimmed that too. But Brazil's crop, is 3 times the size of Argentina's, and it's about 50 million metric tons, or 40 million metric tons higher than the United States' soybean crop. So Brazil's the leader. They're the ones that are going to go out on the export market, and when they have a record large crop, I think we can expect that to be influencing the markets lower.
Well, and we have a question that came in via Twitter about this exact direction. So let's go to Bradley in Nebraska. I know Bradley was busy this week. They were in that snow blanket. I don't think blanket sounds like it was good. I think it was miserable for many. He's asking, Brazil announced it can add 6 to 8% more acres a year by taking pasture out of production. In total, they can add 60 million acres. So Brad's question is this ground productive enough to offset the lost acreage in Ukraine? And then he extends it one more, is this bullish for beef?
Well, this is quite a question. I mean, this covers a lot of ground, 3 continents, really. So to start with Ukraine's lost ground, actually, I'm not sure there is that much lost ground. When you look at what they were able to harvest in 2022, it was 95% of what they had originally planted for feed grains generally. And I think some of their production is lost because of less inputs going into the crop. But honestly, other than the 22% of ground that's past the front line, and some of that is still going to reach the market one way or another, whether it's under Russian ownership or not. Ukraine is not really lost as much as that. However, their exports to China, so they were a good seller to China, and Brazil is able to step in for that, whether they're taking it ground away from the rainforest or from pasture or wherever it's coming from. Yeah, Brazil's the ones that's stepping in to do that. Coming out of pasture, is that ground productive enough? I mean, that ground is very fertile. It's been planted to pasture. That's not native necessarily. So that availability, if you've got the logistics, the roads, the railroads to get that stuff to market, I believe it is productive ground.
Which is always a concern there in Brazil, is about the infrastructure. Let's get to livestock for a minute, live cattle. Trading in areas that still look okay, but there seems to be maybe some flashing lights of danger ahead?
Yeah, I mean, and even
or
from the
caution.
Yeah, I mean, even from way down the supply chain to the grocery store level or the wholesale level, box beef prices continue to kind of dwindle here. And so I think if you were looking for a boost in live cattle prices or the cash cattle market, this is not the time we're going to see it. The signs are generally pointing towards a little bit of a slackening there, and I think that's appropriate seasonally. It just needs to be expected, but I wouldn't expect the market to fall out of bed completely. The supply and demand, the fundamentals are still there for that market to be supported.
Cattle on feed came out Friday afternoon. What'd we see?
Exactly. So the cattle on feed is showing the total inventory is down 3%. The little snippet in there that's an interesting piece is that the heifers is only down 1%, which means the heifers are going into feedlots and not being maintained in the herds, which means all of this destruction of the herd continues to happen. So your long-term outlook for the deferred futures contracts is still as bullish forever. Even though analysts were going into this report expecting that inventory number to go down more than that, I don't necessarily think the market is going to react to this with a big bearish reaction.
Not react bearishly, but for how long, though?
Well, I'm talking about a Monday thing.
Okay.
Like, I don't think we're going to come in on
Okay.
Monday and have a big,
Yeah.
thing.
All right, hog market. We're going into the Chinese New Year.
Yes.
They used to celebrate with American pork. Not been a lot of celebrations in China. Are we still caught up in they're still coming out of COVID and not buying as much U.S. pork?
Well, right, but the expectation is now, and this is sort of my input about the energy prices, is that the expectation is China is now out of lockdown. You're going to have folks going back to restaurants more, doing more economic activity, driving around more. So I have an expectation for crude oil prices to go up, fuel prices all around the world to go up, and potentially pork prices as well in China, and then that would carry over into the export market as well, potentially.
But we also saw from China this week, smaller population, slowdown of their economy.
That's a very, on a very long-term basis, sure, but they still have a lot of people that eat a lot of pork when they are not being locked down 10 days at a time.
Okay, so we're going to talk energy And cotton. If you want to get 15 seconds in on cotton, we've rallied 2 weeks in a row. Have they bought enough? Are they buying acres?
I don't know that it's at a price level where it can really compete with the profitability of soybeans particularly, but also corn in a fertilizer scenario, depending on how fertilizer goes. I don't know about buying acres, but I think of cotton in the same way that I think of crude oil and any of these other global consumer commodities. I think it has potential to go up with China's fortunes.
Thank you, Elaine. We are going to put a pause on this analysis and continue our discussion about these markets in our Market Plus segment. You can find those segments on our website of markettomarket.org. Next week, we are going to look at how small-town meat lockers keep niche markets rolling post-COVID. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because a pioneer, our name is our mission.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.